Well, good afternoon, and welcome everyone from across the United States and beyond. My name is Milton Jones, and I'm the co-chair of the Atlanta chapter of NACD. It's my pleasure to welcome you all today on behalf of my co-chair, Betsy Camp, and the entire Atlanta chapter of NACD. I'd like to extend a special welcome to our 13 Atlanta chapter sponsors, many of whom have joined us for today's event, and all of whom were listed on our opening slides. We appreciate their continued support during this time of virtual programming. Now, a couple of quick housekeeping notes before I introduce our stellar speaker lineup. All participants are muted for audio quality, and be advised that this session will be recorded for future public access. Now, as our slides also indicated, the NACD Directorship Certification Program is now available entirely online. If you're interested in this first of its kind certification for directors, you can provide your information in the event survey that will be available in the chat feature at the close of this event. So now that the house has been kept, thank you very much again for attending this special webinar featuring 3 current and past U.S. Securities and Exchange Commission leaders with more than 15 years of experience. This is a timely program that will feature a fireside chat with the Honorable Jay Clayton, SEC Chairman, who was nominated to the position by President Donald J. Trump and sworn in on May 4th, 2017. Chairman Clayton is a member of the President's Working Group on Financial Markets, the Financial Stability Oversight Council, and the Financial Stability Board. He also participates on the board of the International Organization of Securities Commissions. Welcome, Chairman Clayton. This program will be co-moderated by Luis Aguilar and Dan Gallagher. Luis Aguilar served as an SEC Commissioner from 2008 to 2015 and is the 8th longest serving commissioner in SEC history. He's only one of 3 commissioners to have been nominated by 2 U.S. presidents from 2 different political parties. He's a recognized leader in the areas of corporate governance and securities laws and regulations, and I'm proud to serve with him on the NACD Atlanta Board of Directors. Excuse me. Currently Chief Legal Officer of Robinhood, a fast-growing brokerage giving millions of people access to our financial system. He served as an SEC Commissioner from 2011 to 2015 and held several other SEC staff positions prior to his appointment. Several advisory boards and his own NACD National Board. Now, I'd like to turn the program over to Luis to get the conversation started.
Thank you, Milton. And I want to thank Chairman Clayton and Commissioner Gallagher for joining us today. I understand we have until approximately 4:28 p.m. So without further ado, let's get to it. I'll take the first few questions and then hand off to Dan. And Chairman Clayton, again, thank you for being here. You're one of the most experienced corporate governance attorneys, I think, to ever be a chairman. And now, of course, you are the chairman of the SEC. During the COVID-19 pandemic and national unrest, I hope you're getting hazard duty pay because you're earning it. Now, the question is, what do you see as the most important characteristics of a highly functioning board in this turbulent environment, sometimes referred to as a VUCA environment, VUCA, for the volatility, uncertainty, complexity, and ambiguity we're all experiencing?
Well, Luis, it's great to see you again, and thank you for inviting me here and join our friend Dan for this discussion. Are you able to hear me okay? Everything coming through fine?
Yes,
Great.
I am.
Super. It's a question that's playing out live across our marketplace. You're sitting there in the boardroom, something that you never expected would happen has happened. You've had to, in some significant way, alter the operations of your business. Now, take for example, let's take the airline industry. Huge demand drop, right? You have a cash burn that's set up for 10 times the demand that you now face. How do you adjust your business? And it's a good paradigm, because how do you adjust your business to get through the period that you're facing right now? And then what does your business look like beyond? And how in the boardroom are you marrying those up? This is why it's so important for boards to have a diversity of experience and expertise. People who understand liquidity and capital resources during that time, people who understand human resources, people who understand how the environment may change, all of those things. And a good corporate board is bringing those all together to help management make those kinds of assessments and decision making.
Yeah, wise words based on experience. If you were in the boardroom now, you'd probably see some deer in the headlight looks, and words from you help set the direction where we're going. Now, to bring us more current, to ask a second question, yesterday, the commission adopted new rules applicable to proxy advisors. Now, following the adoption, there's been some discussion about the pros and cons of the rules, but that's not for us to discuss today. The rules are now adopted, and I think the NASD members would like to know what may be expected of them as directors in engaging with proxy advisors. What would the SEC expect to see from directors with respect to these new rules?
Well, Luis, let's start with our objective. There were two objectives driving yesterday's rules. Well, one is for investment advisors, people who manage funds, people who manage Main Street investors' money, to be making good voting decisions based on a very robust mix of information, okay? And to make sure that the proxy advisory process plugs into that in the most efficient way possible. So directors should be thinking about, how do I provide that really robust, enhanced mix of information to those people making the voting decisions? And to the extent they're doing that today, keep doing it. To the extent that these rules make it easier to do it, do more of it. To the extent that you haven't been doing a good job of getting that kind of information into the hands of people who are making voting decisions, do a better job. That's the simple message. But what we're seeing, let me go back to your first question and explain this. One of the wonderful things about our capital markets is you got to talk to your investors every quarter. You actually have to talk to them even more than that. It's really helpful that there is this minimum quarterly dialogue, ongoing dialogue with the marketplace to tell people where your company stands. It's helping us from a market perspective, but it's helping us even more broadly as a society. This is just another component of that. Let's have really good information for decision making. And then let's make decisions in the interests of those people who have their money at risk.
Yeah. Thank you. I suspect that like the boards I sit on, corporate directors around their country are asking their lawyers to show up with a primer, especially in advance of next proxy season, so everybody can be prepared in advance. To that extent, I'm glad that the rule was at least giving people plenty of time to get up to date and react to next proxy season. So thank you for your response. Now to shift a little bit, Dan and I want to dig a little deeper into one of the things you've been experiencing, which is the impact of COVID-19. And the SEC has been quite active, as outlined in a public statement issued on June 26, not only by yourself, but by every division head. And it's available on the SEC website. And I recommend to all the directors on the call to look it up. But the SEC has been very active in providing targeted regulatory relief to assist market participants affected by COVID-19 and to ensure the orderly functions of our markets during this time. Chairman, do you foresee further action being taken?
So we had to take a lot of action in March. People were shifting from a very physical presence, interactive, saw people on the floor of the New York Stock Exchange, to a virtual environment across our industries, investment managers, banking, all of those. That shift actually went better than I could have expected. Were there friction points? Sure. Were there things that we needed to do to deal with acute problems? Yes. But I never got to the level where I thought there was some kind of systemic risk from an operational perspective, which was great. It's a credit to the industry. It's a credit to the people who here at the SEC and at the banking regulators who pushed on business continuity plans for a number of years before I ever got here. So that was terrific. Some of that relief is that we had to give and measures that we had to take, we've actually pulled back. And we're in a dialogue with the industry, and I welcome anybody who has views on this, to come forward. What do we still need to do? What can we pull back? And what have we learned? I'll tell you what we've learned is that there are a lot of things in our rules that require physical presence, wet signatures, and the like, we probably can get rid of most of those if we have appropriate safeguards for a virtual environment. But that's one of the improvements that I hope will come out of this period of stress, operational stress.
Yeah. I hope that our audience, and I'm going to hand this over to Dan in a second, but I hope our audience appreciates that you're not only having to keep an eye out on what's good for public companies and the markets, but you're running a sizable business yourself. Yeah, you have 4,500 plus employees, 12 locations, 11 regional offices and the headquarters. You were the first government agency, unfortunately, to have COVID-19 inside your doorstep and had to therefore take immediate measures. And as far as I can tell, you didn't miss much of a beat. So that is both a guide to many of the public companies. Also, you live by example. So you're not speaking from an ivory tower. You're providing advice based on what you yourself have had to go through. So thank you, though, for the advice that has been timely given. I will now turn it over to Dan to ask a few more questions.
Well, hello, Mr. Chairman. It's so good to see you. It does feel like a little bit of an open meeting. Luis and I haven't done this together in a couple of years, so it's like getting back on the horse. And I'll notice, when you're chairman, I really don't think you have to give the disclaimer, but of course, Chairman Clayton's comments are his own and not those of the commission. It got to the point when I was at the end of my tenure on the commission where I didn't have to give it anymore because I lost so many votes that it was pretty obvious that I didn't speak for the commission or just about anyone else except for myself. I kept losing to Luis time and again. And so, but
little revisionist history, but I'll take it.
Oh man, I can't tell you. I mean, I have obviously a bunch of questions for you. I just can't tell you how much I enjoy seeing you and what a great job you're doing at the commission. But being back together with my friend Luis, we had a lot of fun together at the commission. And
we did.
Been about 5 years, and I miss it. But
well, just Dan, let me jump in and just say to your credit, Luis's credit, and your colleagues, when you were here, Luis was talking about not missing a beat. That doesn't happen overnight. That happens over 20, 30 years of people being committed to a mission, knowing how to pick up the slack for each other, work together. So, I inherited a very well-functioning organization, and of course that goes to our predecessors, and you and Luis among them. So,
thank you for that.
Dan and I were glad we could do that for you. Dan and I very glad we could do that for you.
Yeah, I couldn't agree more though. The staff is what keeps the place together, and we're stewards for a little brief glimpse of time, but it's good to hear that you have that same sentiment that Luis and I had. So Jay, going back to the COVID-19 issues, one thing I watched from the outside, and thinking about how hard it must be for you and the rest of the commission and the staff to weigh in, go back to March, right? I mean, pretty tumultuous time frame, a lot like what Luis and I dealt with in 2008 when I was on the staff, and he was a relatively new commissioner, and we were working together on Lehman and all things financial crisis. And I get what it's like. I mean, there's just so many pieces of data coming in, so many requests, so many issues. And, the one thing I personally thought the commission did an amazing job with was giving guidance to companies about expectations on disclosure, right? There's no manual written on that. There's no break the glass. But there must have been, from what I saw, a balancing of what do shareholders need to see in times like this, right? Because you need disclosure and clear disclosure and real disclosure more than ever in a time of crisis like that. But at the same time, you have companies that are also in crisis. You use the example of the airlines and throwing additional requirements onto them, making life harder during a very hard time already. Must have been an interesting balancing act. And so I'm just curious to get your thoughts about how you went through that process. I think, based on public comments you gave personally, we saw a lot of pretty vibrant disclosure coming out, and you can touch specifically maybe on forward-looking statements, something you'd be loath to give during a time like that. But I think you guys prompted a lot of, down the road disclosure that helped shareholders. So how did that work for you? And what was your thought process?
Good question. And, let's put it this way. It's not the first crisis that we've looked at together. So let's just put that on the table. But
people don't know that part, huh?
yeah. So going back to personnel. So in our two very investor and company focused divisions, you've got Dahlia Blass in investment management. You've got Bill Hinman and each of their teams, people with deep experience about what companies can do, what they can disclose, how they operate, how they look about things, and then on the other hand, what investors want and what they're thirsting for. So with colleagues like that, you look at a situation like this, you say, okay, what's important to companies has changed. And let's go back to the airline industry. Today was earnings day for a number of airlines. I got up early to watch earnings because I wanted to see what's out there. And they are disclosing, okay, here's my cash burn for the day. Here's how much my load looks like right now. Here's when I expect it to pick up. With those factors as I see them in front of me, here's the runway that we have from a liquidity perspective. And when do we expect demand to pick back up? Well, we expect demand to pick back up when people feel comfortable, not just getting on an airplane, but getting to an airplane, getting from an airplane, where are they going? Those types of things. And that may be driven by the availability of therapeutics and a vaccine. Well, who would have ever thought that that would be the kind of discussion that an airline was having with its investors in a quarter? But we have this wonderful principles-based system, which says what you're talking about in the boardroom, about what's important to the company and its performance going forward, is what you should be talking to your investors about. And if we hadn't had that paradigm for the past decade, you wouldn't be able to shift into this, but people did. We said, hey, look, we understand that what you're talking about from the point of view of company performance, prospects, et cetera, has changed dramatically. Please communicate that as best you can to your shareholders. Make sure and other investors. Make sure that what you're saying in the boardroom and the management meetings is consistent with the way you're communicating it and complete. And we're not going to second guess good faith judgments that you're making. You're making a judgment about when a vaccine may be available or when a therapeutic may be available. No one knows for sure right now, but we know that you're estimating it to understand how to run your business. We're not going to second guess your estimates. That's the kind of message that I hope was received in the issuer community from us at the SEC.
And it sounds like, I mean, you give the airline example specifically. I mean, just broadly, and obviously you can't say across the board, make any too sweeping of a statement, but are you happy with what you've seen come out by way of these types of disclosures, industry to industry?
Well, since you gave the disclaimer, it's my own views, not the views of the commission. I guess that gives me more liberty. But broadly speaking, Dan, I am satisfied that most large public companies have taken up the challenge to provide that kind of insight into the challenges they're facing in the boardroom and providing that to investors.
Yeah. And I got to tell you, I remember, I think it was a CNBC interview with you, and I can't remember if that's what you called good housekeeping with that disclosure. You tend to use that a lot. You look for good housekeeping in various areas. I've noticed that with you, but I remember, before Robinhood, I was at Wilmer Hale back in March. I think you triggered a big discussion in the corporate disclosure community and in the law firm community. What kind of advice do we have to give to clients? Because that's a hard thing to do, to think about being proactive at a time when, right, everything's going on.
And let's be clear, we weren't looking for earnings estimates in terms of EPS.
Right.
Just communicate with your bondholders and your shareholders how you're looking at your liquidity, how you're looking at the operations. And a big part of this was health and safety of employees, customers. What measures are you taking to ensure their health and safety? And how is that affecting your ability to operate? We all had to do that. We had to go to mandatory telework, change the way we operate here at the SEC.
Right.
But that we had to put that first. And if in your business you have to make dramatic shifts like that, tell people about it.
And I like the way you frame it. You teed me up for my next question, because you said, kind of tell your investors what you're talking about in the boardroom. And that to me is pretty meaningful, right? Because it not only says what types of disclosure you're looking for, but I'm reading into that you're expecting, and there would be a normal expectation that these conversations are happening in the boardroom. And I guess, for this audience, obviously an NACD audience, the question I would have is, and it's related, I think, to Luis's first question, what's your view of the board role, but specifically with respect to disclosure in a time of stress like COVID? What should the board be pressing management on? What should management be teeing up to the board as you think about corporate disclosure?
Dan, I think it's the same as it always is. And when I would participate in that process, you look at the earnings release, you look at the MD&A in the 10Q or the 10K, and you say, hey, are we talking about this in the public in the same way we're talking about it in the boardroom? And of course, there are judgments to be made in the boardroom, and long-range planning and prospects and things like that. But in terms of past performance and short-term outlook, are we talking about it with the same words, the same language, the same types of metrics that we're using in the boardroom? And of course, that's the way you look at it. But what you're in a crisis like this, what you're talking about has shifted dramatically, right? Because you're talking, as Luis alluded to, and you're alluding to, you just start thinking about much different things operationally from a financial point of view, and your long range planning is, what does my business look like on the other side of this, and how much will it have changed? Because as I like to say, back to my mathematics days, life is path dependent.
Absolutely is. Totally agree with that. Luis, I think I kick it back to you.
I think you do, but I want to follow up on something you guys spoke about, maybe a little bit more pointed on the COVID-19 impact on human capital and the health and safety measures Jay alluded to. COVID-19 has certainly put a focus on the human capital human capital management, and many investors, as the chairman knows well, have been asking for greater disclosure on how a company's workforce is being affected, particularly as to any health and safety measures being taken or being considered. Now, one such effort involved a recent letter sent to the SEC by over 90 investors led by the American for Financial Reform, asking for more disclosure. But after that, at a recent SEC roundtable, the SEC Director of Corporation Finance, Bill Hinman, said that the SEC staff is actually monitoring the human capital related disclosures and is considering whether or not it makes sense to recommend any additional rulemaking. So I was wondering, Chairman, if you can tell us a little bit about the types and qualities of disclosures that the staff is seeing, or more importantly, what they expect to be seeing, and that they don't see, eyebrows are raised a little bit, and where you see any potential impact on rulemaking, although admittedly that could be a little early to conjecture on.
So Luis, let me say, let's take this on two tracks. One is our overall track around disclosure. We have a proposed rulemaking out there that has a focus on human capital disclosure and enhancing human capital disclosure requirements. And what we're really focused on, going back to what we were talking about, is how does management, how does the board of directors look at human capital, the development of human capital, the contribution of human capital to the business in their particular organization. And this is, I'll go back to the latitude Dan gave me. This is overdue. We've gone from plant, property, and equipment dominating the value on the balance sheet to human capital and intellectual property, dominating the value on the balance sheet. And our disclosure rules should reflect that. And we're working through that with the staff. To your point about human capital, health and safety in this pandemic, which is front and center, in the guidance that we put out both for first quarter earnings and for second quarter earnings, we identified a number of specific things that companies should look at and say, is that relevant to my company? And how should I be disclosing it? Is that material? Is there whether it's the availability of, in Q1, it was the availability of PPE. Is that, do I have enough? Am I using it in the right way? To get, what health and safety measures do I have to take? And that evolved significantly from Q1 to Q2 in terms of the types of issues. But what we wanted to do was say to people, hey, here's some things to please think about disclosing to your investors and thinking about, as you're running your company. We don't substitute our views on how to run a company but please think about how to communicate these to your investors, both from a risk perspective and an operational perspective.
That's it's a never-changing, very dynamic, fluid area. I, on behalf of all NACD members, appreciate that the primary regulator of public companies is very mindful that this is a fluid, changing, and that companies can only take the best stab at the disclosure based on what they know at the moment. And that may change whether or not there's a vaccine or a surge that affects a particular operation or something that we can't even predict, that you just don't know what you don't know. And it's good that the regulator keeps track of the fact, in this kind of world, what you know right now and can speak with certainty right now may not be true in 5 minutes. So, difficult for all of us. Dan, you and I had kicked around some ESG matters, and did you wanted to address those?
Yeah, Jay, I know I've heard you speak about ESG. I think recently Commissioner Roisman a week or two ago gave a speech about ESG and the sort of public company side of ESG disclosures, and then he was pretty forceful and eloquent in talking about the role of asset managers with respect to ESG. And so this is all of your commissioners, I think, since you've been chairman, and yourself have spoken several times about this issue. It's dominates, I think, in governance circles broadly. When you go to any conference, this is always a hot topic. And so wanted to get your thoughts. There's, clearly a push in certain circles for more information. That push is, from my experience, usually directed at public companies. And I think, again, Commissioner Roisman redirected a bit of that to the asset managers themselves, who handle trillions of dollars for beneficial owners. But when the push comes to public companies, it then comes directly into the SEC, right? Requests to regulate in this space, right? To mandate disclosures on certain environmental or social issues. And I think my own position on this is one where you always start with materiality. I think you do the same thing, and I've heard you say that in speeches. But I'm just curious, it seems like every day, every week, every month, there's something new that comes out in the space, and wanted to get your thoughts, several years into the job, about what you see emerging here. Do you see the SEC at any point jumping in to regulate, or do you think this is a matter better left for private ordering?
So look, this is an issue that, let me put it this way. There is a general level, there's generally dissatisfaction across the spectrum on what I don't want to call an issue. I want to say on this topic. And the reason I want to call it an issue is because it's not one issue. This topic of ESG. There's general dissatisfaction from issuers who are trying to figure out what they should be providing their investors who want standardization, and a lot of other people who are interested in this. My own view, again, taking the Dan Gallagher latitude, is we need to break a problem like this with general dissatisfaction needs to be broken down into its component parts. So let's take G. G is actually the easiest to solve of these issues. There are G factors that drive value and that are material to an investment decision. We have a great deal of G disclosure already. Your proxy, your 10K, otherwise, your committee structure, the way you have board of directors, the way you search for diversity of thought on your board, those types of things. There's a lot of it there. I think that part of the problem or the topic can be isolated, and most people can be satisfied with the level of disclosure. Or if they're not, let's tell us what specifically isn't there, because there's a lot there. Okay, that is truly material to investment decision. S is evolving. S is something where different industries, it depends on your jurisdictional footprint, depends on whether you're vertically integrated or a very horizontal flat company. There's a lot of company specific issues around S. Well, how you engage with customers, how you engage with the community. That's a tough nut to crack because it's different for different companies. But what do we look at in terms of S? Now, E, put E aside, there are industries where E is clearly very material. Let me say it again. E is clearly very material in industries, both currently and where we may be going. And then there are other industries where it's not. And it's material in some industries in different ways. And it's material to different strategies. You can be a company that has a significant carbon footprint, a very significant carbon footprint. The risk of regulation and others is high. But if your approach is to transition the company, that may be an attractor of capital. Take the same company that's not interested in transitioning, that may be a company that doesn't attract capital because it's higher. But at a static point, that company looks the same. But if it's transitioning, it's a much more attractive, ED risking type event of it than if it's not. So break it up into its component parts, look on an industry specific basis, and then look out dynamically to see whether you're increasing or decreasing risk and value enhancing issues in that. That's how to get more satisfaction from investors, stewards of their money, and companies. That's my view.
I think that's very well put. And, having been in a big public company and gone through the process of drafting and editing and revising a corporate social responsibility report, I think when left to the private ordering, when the government's not in the business of prescribing things, it can be a pretty amazing and rewarding process at any public company to go through and think about the ways in which you touch those E and S and G factors that people are so interested in, and be able to convey it in the way that you think tells the story best. And so it'll be interesting to see how this evolves. Obviously, the debate is going to go on. I imagine it'll go on when, after you're gone, and future commissions, will have to deal with this. Luis and I definitely, had to deal with these issues during our time. Some mandated disclosures from Congress, some other where interested parties would come in with specific requests. So it's going to be interesting to see how this develops over the next 5-10 years.
It's true that Dan and I had to deal with it, but I would assume your experience, Jay, you may not get the misses from just about everybody that has an ability to put a conference together. But there are multiple ESG conferences daily, and it seems to be picking up a lot of momentum. I've attended a few, and it's like the blind people describing an elephant. They're all kind of all over the place in some ways as to what they think they mean and what standards perhaps they should follow. I just recently read the U.S. Government's Accountability Office had a report on ESG, and it basically says it's very difficult to read. And it's very difficult to compare across public companies, mainly because everybody's got their own take on it. That's both good in a way that companies should be looking at what the impact is on their company and their industry, where they're located in their industry and their investors. It's bad in the way that you can't always compare apples to apples. So it's got limited utility. But I think over time, the dialogue is good. Companies looking at it to see what's material for them and deciding for themselves what they should be disclosing. But I do think that they should be looking at those metrics in some ways and if they're talking about it in the boardroom, and I know they are, to your point earlier, they ought to see about what is appropriate to say to their larger stakeholder base. Let me shift a little bit to something you said a little bit ago, which was really diversity of thought, which is very important to have in the boardroom. But you know, a related issue to that is what we've seen in much in the news as of late, and we've all witnessed the fact that there's been a great deal of discussion about our nation's diversity and how best to make things more inclusive. The SEC itself has had rules requiring public companies to disclose in their proxy statements certain additional information in specific diversity characteristics are used or not used in selecting directors. And I know it's an area that the staff, at least in the years I was there and for a few years afterward, would monitor it and would annually give a public statement about what they're seeing in that area as to what people are disclosing. So I was hoping to get your thoughts about companies' disclosures in the area of diversity and inclusion. What is the SEC staff seeing as a trend in such disclosures? And to Dan's point on your own thoughts that nobody can hold you to, what would you like, what do you think makes sense for them to talk about?
Great question. And I'm gonna address it in three places. I'm gonna address it at public companies, I'm gonna address it in the asset management industry generally, and then I'm gonna address it here at the SEC. And I know I'm gonna take up a lot of time, but I hope you don't mind. In public companies at issuers, about a year and a half ago, our Division of Corporation Finance put out guidance, additional guidance, saying that we expect companies, if they take diversity into account and the director self-identifies, to talk about that as part of the mix of their board makeup and how it facilitates decision-making. So we were looking at what we were seeing based on the prior guidance, and we thought it was necessary to give additional guidance respecting people's rights to self-identify, and also only tell us about it to the extent you really are factoring it in board composition and decision-making. So we've made that clear to public companies, and now we're monitoring that as you discussed. Here at the SEC, Luis, you and Dan have been here. Look, I made the decision that we ought to be thinking about this and being transparent throughout our organization about diversity, inclusion, opportunity, and again, speaking for myself, my own personal belief that to the extent you facilitate those things, you add value to an organization. We have internal scoring about how people feel about those issues. I can tell you that there's a disparity of view on how well we're doing. I did not like that disparity of view, and we've been working on it and for a number of years. But what I can say is that recent events have provided us with more of an ability to look in the mirror and say, are we doing this well enough? And what can we do for going forward? We are doing that. I'm very pleased here at the Commission with the open dialogue we have across what we can do to do better. In terms of open dialogue, let me now turn to the asset management industry. We had last week a special meeting of our Asset Management Advisory Committee focused on this very issue and the demographic representation in the United States versus the demographic representation in the asset management industry. You look at those two sets of numbers, I don't care who you are, you say there's an issue here that needs to be addressed. And again, it was a very candid, direct conversation with an eye toward what are we gonna do about it? And I think you and Dan said, we have convening power. I try to use that convening power only when necessary. This is a matter on which the exercise of that convening power was necessary, appropriate, and we intend to do it again.
As you know, I've been very vocal about diversity and inclusion for years. So I'm delighted the dialogue, I mean, it's taken place. I wish the circumstances were different, but I'm glad the dialogue is taking place. Now we just need it to be followed by action. But leaders such as yourself being vocal about it, I think carries a lot of weight with a lot of people. So,
Luis, you and I have talked about this, and I want to say, thank you for our discussions about this in the past. But it's not just tone at the top is necessary, but it's not sufficient. It's got to be something that becomes part of the fabric of an organization in hiring decisions, promotion decisions, and just something that it's not something that can be isolated from the day-to-day operations of an organization. It's got to be part of the operations of an organization.
Yeah, that's exactly right. It's the obverse of systemic racism and systemic inclusion. You got to have processes in place at the right tone from the top, but also make sure it's trickling down and make sure that all decisions are made with a view toward having the best quality you can have in the people you hire. And I don't think that's possible unless you include all segments to make sure that they're part of the people you're interviewing for whatever job happens to be there. So thank you, thank you for that. Thank you for your leadership on that.
So I'm going to call a little bit of an audible on my next question, Luis, because I can't resist.
Just because you like to catch me off guard.
You know, it's when I wish I could catch you off guard, Clayton. One day I'll catch you off guard. You seem to be impenetrable to shots taken from left field. But it just occurs to me. I mean, this conversation about diversity, you know, it's in the board context, and this is something, you know, at the national board level of NACD, we're just talking about a ton amongst ourselves with the management, Peter Gleason and his team. You know, obviously the mission of NACD is to encourage well-functioning boards, and having a diverse board goes directly to that, and it's a component of it. And so, I mean, you know, first of all, thank you for all your efforts in that regard. You are building on great work, in particular by Commissioner Aguilar and other commissioners over the years. And but you've been particularly outspoken, and I think you're moving the needle in that regard. On the issue though, of taking one step back, not just diversity, but just well-functioning boards generally, what's your sense, Jay? I mean, just as a practitioner for years and then coming in as chairman, is there a trend? Do you see boards performing better, worse? Is there a gap? You know, we at NACD National, of course, we have the new certification program. It's all of, you know, we have these board members, existing board members who want to know more, learn more, be better educated. We have people who want to become board members. They want a certification. I feel this energy, which should be translating into better board performance. But, you know, obviously your view on this is critically important. So I'd love to hear what your thoughts are.
I'm going to give you my general thoughts, but let me just go back to the diversity issue and another way to think about it, which is it's not just what does somebody add. It's recognizing your own blind spot, or that you have blind spots, and that to the extent you bring in people of different backgrounds, different expertise, you have as a collective you have fewer blind spots, yeah. which is in some ways having a group of people that have the same blind spot. That's a really big risk. Okay, let's try to avoid that, and and go forward. Look, boards are a very important part of our capital markets and commerce more generally, right? I mean, the fiduciary obligation of boards to be sitting there and thinking about shareholders, thinking about the long term. Let me take another detour. There's a lot of talk about maximizing shareholder value. There's only one time when maximizing shareholder value, one time and only in a few states when maximizing shareholder value means maximizing today's share price. That's when you're selling the company for cash, right? We all know that. The fiduciary duty is a much more flexible duty. Boards can take into account other constituents and whatnot in how do I serve the shareholders over the long term. And look, when I invest my money, I want a board of directors that's thinking about long-term shareholder value. That's what I would expect as an investor. And to the extent they bring that perspective as a collective, that's what you want. I mean, you and I have talked about this before. Governance structures and the like, they are a means to an end, right? It's that perspective on driving long-term sustained value of the company that is most important.
Yeah, I think that's exactly right. Well,
And what we've seen in this, look, some industries are much more adversely affected. You would never expect it. Like, the airline industry, we talked about that. You can't plan for it. But to the extent that companies have a perspective where we're going to be nimble, right? We're going to operate our business in a nimble way because times change, and we're going to be lean so that we can pivot and we're not stuck with, but we're not going to be fragile. Yeah,
right.
we're not going to depend on a single supplier. Like, that's the type of perspective that really good boards provide to management.
Yeah. And look, you and I had some pretty up close and personal experiences with bad boards during the financial crisis. And, I think, I personally think the trend is moving in the right direction. I love the thirst for knowledge. There's almost a cottage industry around governance learning these days. And I agree with you. I mean, that just plays.
We've learned, driving costs out of is fine. That's a fine perspective. But take it to an extreme, it makes you fragile.
Absolutely right. That's right. Luis, I'll cede it back to you. I know you have a good question.
Well, I'm going to change topics only because we talked about trying to get Jay's perspective on the following. Otherwise, I think you're having a great discussion. But, one of the things that during your chairmanship you've been very outspoken about is the declining number of public companies. And under your watch, the commission has taken actions to try to make it easier to access the public markets. Now, how do you feel about the progress? I understand that COVID-19 has thrown a curveball that you can't really measure the impact, but sooner or later, and I hope it's sooner rather than later, but fear that it may be later, we'll get back to normal. And do you think that there's more that needs to be done now in anticipation of us getting back to normal, so that when companies do need to access more money, either to address some of the issues that you mentioned, where they realize that they cut back too much on costs and therefore affected their revenue, now they need more capital in order to fulfill their strategic and executory plans. So do you think more is needed, and how do you feel about the progress made to date?
So Luis, I think that under Bill Hinman's leadership, the Division of Corporation Finance has made great strides in eliminating some of the frictions of being a public company, while actually enhancing investor protection. People characterize it as a trade-off between lessening frictions and investor protection. It's not. Smart regulation reduces frictions, increases investor protection, and I think Bill and his team have done a very nice job of, on the entry into the public market space, eliminating frictions, being more flexible, still providing the same investor protections when people actually buy into those securities. And then on an ongoing basis, looking at a number of our rules and trimming out the fat. But like I said, with human capital, adding requirements where markets have evolved. So, I think hats off to them. They've done a very good job at doing that.
Yeah. The SEC is part of the ecosystem in this regard, but it's not the only player. And as Milton said earlier, you sit on a number of important boards, one of them being the Financial Stability Oversight Council, which is a very powerful board, but it brings everybody from the financial, all the financial agencies and then some. Are there discussions that you can speak to, of course, about further actions that group may be thinking about in order to ensure a sustainable recovery? Because the SEC and what you're trying to do can't do it all by yourself. You're an important cog, but ultimately you're just one of the few.
Well, as you and Dan know well, our function here is function. We don't have a checkbook. We don't have fiscal policy. That's not what we don't print the money. We don't spend the money. We just make sure that things function as well as they can. And then to boards like the FSOC or the FSB, what we bring is our market knowledge. And what I could say is, to those folks who have the checkbook and have fiscal policy and work with Congress. They've done a tremendous job. My friends at the Fed, the Treasury, Congress with the CARES Act, the way they acted quickly, decisively, and in areas where relief, capital, liquidity was most needed is really remarkable. We should all just say, great job. And they did it smartly and without fear. If you wait too long, you wait till it's too late. They did a great job. Now where are we? We have relative stability. We still have a lot of economic uncertainty. And are we having those discussions about how best to handle that going forward? Absolutely. Absolutely. And where are the risks today? Yes, we're having those discussions as well. I've talked about this at some length. I think most companies, most participants in our capital markets are forecasting some type of tangible recovery, in the continuing tangible recovery into the fall and accelerating more into the spring. That's a reasonable perspective. It's built into the rating agency models these days. It's built into other people's models, but it's a risk if that doesn't happen. So we need to continue to monitor that, because a lot of people are setting up their liquidity profiles and the like because of that. And those are the types of things that we discuss.
Glad to hear they're being discussed. I've just noticed that we're nearing the end of our allotted time. But Dan and I had been kicking this around, and I love the question we wanted sort of to end with. So Dan, why don't we just jump to that? Because that's going to bring, I think that's a good question to end on. But I'm going to let Dan be the one to ask it.
So, Jay, you've been pretty transparent. Despite all the guessing about when you were going to leave, I've heard of your departure about 50 times over the last 3 years. I think you've been pretty transparent that you're going to stay through the election, and then make your next move wherever it may be. Looking back already, because you're kind of in that final stretch. What are you most happy about in your tenure, and what's sort of top of your list in the next few months with your remaining time as chairman that you'd like to accomplish?
Most happy about operationally, internally at the commission, what we've done in terms of diversity, inclusion, and opportunity, and the raising of our level of expertise. Somebody asked, that's what I feel. That's what I feel best about. We're stewards of this wonderful system that people gave us in how to regulate markets. My job is to come in here from that perspective, and where it's outdated, try to modernize it, enforce the law, try to make it good. But the raising the organization in those key areas is the thing that is most important to me.
I was going to joke and say that I owe Luis $10 because I thought it was going to be regulation best interest, but it doesn't surprise me to hear you say that, because I do know how important that is to you, and quite frankly, despite how much what an affinity Luis and I have for the commission and the staff, I think improving the operations, certainly improving the diversity and inclusion was definitely work that needed to be done when you got there.
Look, this is. Let me go back to the metrics and then come back to the people. We have a building. Actually, we have this building and 11 others in our regional offices. We have IT, and we have people. The building and IT are pretty fungible. We got to have good people, and we got to have people who believe in the place they work, and and believe in an inclusive environment where they support each other. And that's the most important thing.
Yeah. That's a great answer. I heard another chairman once say that when the people go down the elevator and leave for that day, the SEC stops. But I cleared my throat and said I've never been at the SEC where we didn't have people there 24/7. So I don't think it ever stops, and the people there and their passion are wonderful. And I'm glad that Dan owes me 10, because I've lost 10 to him, because I thought your significant to-do list was to build a statue for him in the front of the halls of the SEC. So I'm glad that's not even on your list. Kudos for that.
You know what Luis, you know what upsets me? You know what really upsets me? Sometimes, I have to go through the turnstile and they let Dan in.
Yeah, I've experienced that myself once or twice. Well, I'm about to hand this over back to Milton, but let me just thank Chairman Clayton and Commissioner Gallagher for being with us today and sharing deep insights. I noticed some good comments came in from the chat box. I'm sorry we didn't get a chance to get to all of them. But with that, and my thanks to both of you, I will now hand it back to Milton Jones for some closing remarks.
Well, I want to echo Luis's thanks, and I want to thank all of you for your time today. This was a really unique opportunity to hear from the SEC's leadership on what boards can do to fulfill their responsibilities, and that's certainly something that we're all focused on. We've heard very pertinent and useful comments from the chairman that should help us all be more effective, certainly in the face of pandemic challenges and other issues we face. I'm sure that our virtual audience enjoyed spending time with you. There were really great comments in the chat room, and hearing the SEC perspective on the important questions that all of us are managing and thinking over day by day. So Chairman, Dan, Luis, thank you all very, very much.